In this video, I want to look at a different class of investment, and we'll look at shares. In particularly, we'll look at Tesla's share price, which I believe it has the strongest, the largest growth over the last 10 years. So those are the prices here. Year 1, 31st of August, 2012, $1.90. Year 5 years later at 23.73. Year 10, 275.61. Now, how do I get those prices here? The way we do it is, now if you go to sign up a free account at TradingView, normally if you look at the Tesla share price, you see a chart that looks like this. Now, this is not a good way to see the chart because in the beginning, it looks like a flat line. But being an exponentially growth company, you need to actually click this logarithmic scale. Then you will see it, because otherwise, there is massive growth in this section here, but you can't see it. So if you turn it into a log scale, you can see that it actually does follow a trend line in the last since it was IPO. Back in 2010. Now, 10 years ago, 2012, August, the price is here. Over there, that one there. So if you look at that, see, those candles are monthly candle. So if it is green, it means that the closing price is higher than the opening price. So on that particular month in August, you see the closing price up the top there, it's $1.90. You can see it. It's over here, up the top, under C, $1.90. So that means on the last trading day of August 2012, it closes at $1.90. And then you can do it in August 2017. So you see the closing price there is $23.73. And then we're now in September, but let's look at August 2022. Now the candle is red. So it closes at 275.61. So it closed down. So obviously the share price has dropped since the all-time high to now to the current price. It has dropped. So this is how I get those closing price here. Now, how do we pick the best stock? One of the good way I find is going to finviz.com. Now, this is a free website, and click map, click the S&P 500, but let's look at a 1-year time frame. Unfortunately, it doesn't have a 10-year time frame. We can only look at a 1-year time frame. And the larger the area, the larger the market caps. So we can see that Apple being the largest, 2.14% up, Microsoft minus, Amazon, Google, they're all minuses. So Tesla is the only one that is doing fairly well, 19.1% up in the last year, last 365 days. So this is a good time to pick the winner. But to truly pick the winner, you have to look at the long-term time frame. It's like looking from a 10,000-foot view. So now if we punch in those numbers here for these, you can see that there's a trend line. So it might go up very quickly, and then it went sideways for a long time. This is, and then when the Model 3 was released, before then, it was touch and go. The company could go broke. But then when Model 3 got released, the company has been proven to be able to scale, and it went up. And now we're sort of touching this medium line again. So what is that slope like? How much growth is that line over the 10-year period? And for that, we need a tool called the compound interest calculator. So if you Google the compound interest calculator, you will see on the second, you come to this website here. So if we put in year one, $1.90 here. Now, at year 10, put in 50.8% an annual compound interval of monthly. You will find that in year 10, you come to 275.14. 275.14 is very close to the current price. So we know that in the last 10 years, it averaged compound rate at 50.8%. So 50.8%, this is principal plus interest compounding year on year for 10 years. Now, if we look at the last 5 years, let's put in 23.73 and see what happened. 23.73. Okay, let's go 50% compounding every year, 5 years. Calculate. So this is 2017 until now. You see that it comes to 274.80, which is again very close to the current price. So even if you take year 5 to year 10, though these 5 years, you are still achieving a 50% annual rate, compounding annual rate, which is amazing. Now, what does this look like if we go forward? If this rate continue, 275.61, if the same rate continues, say for, well, let's put it 10 years, calculate, wow, those are the share price. So the company is growing revenue-wise year on year. Elon has said that for many years to come, it should expect a compound rate of at least 50% per annum. And as long as the margin is, going up or even staying where it is, at about over 30% gross margin, we should see the profit of the company also going up for at least 50% per annum. So based on that rate, the share price is a reflection on how profitable the company is. So if the company is making 50% more profit every year, or in revenue is over that amount, you would expect that as well. So the way you can see that is you can go to this Tesla Investor Relations website. Now you can look at this one here, for example, Q1 2022. Now what we're looking at here is the annual growth rate here, year on year. Year on year revenue, 81%. You see that? 81%. But the margin is also increasing. The margin went from 26 all the way to 30. So the margin is increasing. The EBITDA is also increasing. So this is what we want to see. If the revenue is growing for at least 50% per annum, and EBITDA is also growing, more than 50% per annum, that to me is a very good company. Now, last quarter is not as good because they've just opened the 2 new factory at Berlin and Austin. So you find that the revenue has come down a little bit for that quarter, but you would find that Q3 will be back to normal again. So revenue growth year on year 42, so it's a little bit lower than 50. The EBITDA is growing at 52. Yep, so that's over 50 for sure. The margin has dropped slightly. This one here has dropped slightly. So, and we will see that go back up again. I would expect that to be over 30 in Q3 2022. So, hence this company is a very, very successful company. So with that sort of growth, from in 10 years, the share price went up 145x. Now, have a look at other company that you invest, and if you can find a company in the last 10 years has grown more than 145x, put it down in the comment below. I like to have a look at it myself. So from what I can see, this is probably one of the best company, especially a large cap company, with the highest ROI in the last 10 years.